Yes, very good morning to all. Uh, Today, as usual, we are going to talk about currency market analysis. Especially tomorrow is a very important day, as we all know that 27th, especially this 26th night, the US, the Federal Reserve Chairman is going to speak about tightening of bond tapering as well as rising interest rates. So the major thing we have to note here is that that there has been a broad range of selling in the market for the past 3 days. It is due to the fact that market participants are expecting that Fed will raise interest rates this year, especially this March, by raising interest rates for the consecutive three basis points of 0.25%. I mean that what has happened in the market, especially in the last 3 days, is that money has been going towards safest assets from the riskier assets. I mean, most of all emerging markets. So emerging markets are having a lot of selling pressure. So I think that has been seeing in the overall uh, data that we have gotten from the NSE, that FII's foreign institutional investors have sold close to 26,200 crores. I mean, uh, it is what 30% of they have sold in the whole year in 2021. That means in 2021, the FIIs has sold 92,000 crores of equities from the market. I think this month only they have sold 30% of what it was in 2021. So it is the first thing we have to be very noted. At the same time, what we have seen is that the Ukraine-Russia issue is another geopolitical thing. But I think market participants have more or less very peculiar about. They have been very assured that Fed will raise interest rates because of rising inflation in the US. It is now close to 7%. I think that is one of the reasons why money has been moving towards safer assets. So the barometer for this is that you can see that for the past 1 month, the 10-year US bond rates, 10-year US bond yields have risen by 20%. I mean, in just 1 month. So, and the Dow Jones Industrial Average, which is the index of top 30 companies in the US, has declined by 5%. So this is one of the major things we have to be noted. As well as you can able to see that there is also we noted that Indian bonds, 10-year bonds also rose to 6.65%. Last year it was around trading around 6.05%. I think it has been rising faster than expected. So this is one of the major thing. So another thing which is interesting report that has been generated by Model Oswald brokerage is that so the market normally discounting the thing more or less that if the Fed is going to raise interest rates, the market is going to be more or less uh, down. So it has been shown in the chart. You can see in the picture. So the Fed announces balance sheet normalization in 9/2017. You can see in the chart, and after that you can able to see that 2018 the stocks has been going lower. So after that only in 2020 when the pandemic hit in the market in the overall globe, then only the Fed reduced the interest rates of zero. Then the money has been going towards speculating. So you can able to see that from 1/4/2020 to 1/4/2021, the stock market has been going up. So the basic common sense is that you can able to see that the basic common sense is that when you cut interest rates to bottom, there will be more money for the common people. So they can able to borrow that money with zero interest rates, as well as that they have also more money in their hands. So that more money is not going into the real economy. That's the another factor. That's an economic macroeconomic factor. This money has been going towards only speculating in the market. So you can see that in the past 2 years, from 2020 to 2022, this month, I mean, yes, 1.5 years, 1.5 years, the past 1.5 years, the wealth of the top 10 has risen by more than two folds. I mean, when Jeff Bezos was 100 billion, he is now 200, close to 200 billion. Elon Musk, he was 100 billion, more or less close to that in 2020 starting. Today he is worth 244 billion. So what is the reason for that? So people are pushing the stocks of tech companies. So you can see that in the last 3 to 4 days that the stocks of tech companies has been going under it, especially Netflix, Tesla, Microsoft, Amazon. There's a lot of things we have to note that. So money has been going towards a conservative investment, safer investment. So that has been seeing in the emerging markets also. So that is the reason why market has been going down, which means FIAs are selling aggressively from the market. So, so what is the outlook for the Indian rupee? We have to see that. So, what is the relationship for the rupee is that FIs are pulling the dollars, which means they have selling the rupee investments, and they are pulling the dollar, which means the dollar is strengthening. So, that is the common sense that we have to be alert. At the same time, that we have to see that. Rupee, which was trading around 74.55, 74.4 or 74.34, 39 in the last week, has been steadily and going up and has been getting immense pressure despite RBI intervention at regular intervals that we have noted in the last video. So I think the rupee will depreciate further. The dollar index, which was trading around 95.95 something, was trading around 96.25 yesterday. So overnight the dollar was going up. I think if it surpassed 96.6, I think it has to it will move around 97 or 98 in the coming months. So that the rupee will going downwards. The bias is looking very downward. So I think 75 to 75.25 is the immense immediate resistance for the rupee. USD INR. I think more or less the oil prices are also rising due to the ongoing conflict between Ukraine and Russia. So it is also giving tension for the oil prices as well as for the oil importing companies. That's it. So what is the outlook for the equity markets is that, so the market has clearly and steadily discounting that Fed will hike its interest rates in the coming months. So today is the very important meeting we have for the market participants to look after. So I think what we are saying is that the market has clearly and look after that Fed will definitely raise the interest rates. So they have been selling equities aggressively. So we have noted in our recent report that it is the best time to buy equities if you have cash for the long term. So it has been doing, many clients has been doing that, which is fine. So I think for equities there should be some volatility hereafter. If Fed will definitely give a hawkish stance, then we can able to see that dollar will spike up, rupee will depreciate, equities will have some volatility going up. Thank you.